Hey everyone, and welcome back for another deep dive. We just love bringing you guys along with us as we explore some of the most interesting and honestly sometimes confusing topics out there. And well, today is no exception. So buckle up because we're going deep into the world of crypto volatility.
Oh, yeah, crypto volatility, it's those wild price swings that make headlines and leave even the most experienced investors wondering, what on earth is going on?
Exactly. It's a roller coaster ride out there, and we're here to help you navigate it all. So, to guide us on this journey, we're tapping into the wisdom of Tyrone Ross. He's a financial advisor who really knows his stuff when it comes to this crazy world of crypto.
He actually recently sat down with Yahoo Finance and shared some pretty interesting insights. Some of them you might even surprise those of you who think you've got crypto all figured out.
Oh, I love it when we get to uncover those hidden gems, those counterintuitive bits of advice that can totally change your perspective.
Well, get ready for some because Ross dropped some real truth bombs in this interview.
Okay, let's jump right in then. One of the first things that really caught my attention was this analogy that Ross uses. He compares crypto to a temperamental teenager. Now, I'm not a parent myself, but I can only imagine what that's like.
Oh, yeah. It's those unpredictable mood swings. One minute they're happy and the next they're slamming doors. And well,
Yeah.
crypto, it's kind of like that. It could be up 20% one day and down 30% the next.
30%. Wow, that's a pretty big swing. I mean, I know the market can be volatile, but that's a number that would definitely make me nervous as an investor.
Right. And that's exactly what Ross is getting at. He's saying that if you're not prepared for that level of volatility, if the thought of a 30% drop makes you want to run for the hills,
Yeah.
well, then crypto might not be the right fit for you.
So it's really about understanding your own risk tolerance. Can
Mhm.
you handle those big swings, or are you going to be constantly stressed out checking your portfolio every 5 minutes?
And it's not just about the short-term ups and downs. Ross emphasizes the importance of having a long-term mindset when it comes to crypto. He actually says that if you're not in it for at least 5 years, you're probably better off staying away.
5 years, that's a significant commitment. I mean, it really speaks to the idea that this is a long game, not a get-rich-quick scheme.
Exactly. And, it's interesting because a lot of people get drawn into crypto with that kind of get-rich-quick mentality. But the reality is that it's a market that requires patience and a willingness to ride out the storms.
Okay, so we've established that crypto is volatile and it's a long-term game, but what about those of us who, want to be a bit more active in managing our investments? I mean, are we just supposed to sit back and watch the market do its thing for 5 years straight?
That's a great question, and it's something that Ross addresses by making a clear distinction between what he calls traders and investors.
Okay, traders versus investors, break that down for me.
So traders, they're all about those short-term gains. They're constantly hopping in and out of positions, trying to time the market perfectly. Think of them as the day traders, glued to their screens, watching every little tick.
Oh, yeah. I can picture them now frantically refreshing their portfolios every 5 seconds, living and dying by each percentage point change.
Exactly. They thrive on that action, that adrenaline rush of making quick trades. But investors, on the other hand, are in it for the long haul. They believe in the underlying technology, and they're willing to weather the storms to see their vision realized.
So it sounds like understanding your own investing style is crucial. Are you someone who thrives on that constant action and risk, or do you prefer a more hands-off long-term approach?
Knowing yourself is key, and that leads to another point Ross makes that I think might surprise some people. He says that even the most die-hard HO dealers, those who vow to never sell their Bitcoin, well, they should still have an exit strategy.
Wait, really? I thought the whole point of HO dealing was to never sell no matter what. Isn't that like the crypto gospel?
It's a popular narrative, but Ross brings us back down to earth.
Yeah.
He asks us to think about our financial goals and our life stage.
Yeah.
Are you a 25-year-old with decades to ride out the market's ups and downs, or are you nearing retirement and might need access to that crypto cash a bit sooner?
That's a really good point. Life happens, goals change, and sometimes you need to adapt your strategy. It's less about blindly following a dogma and more about aligning your investments with your personal circumstances.
Exactly, and that's what smart investing is all about, having a plan and making decisions that support that plan, even if it means, deviating from the never-selling mantra.
This is already making me rethink my own crypto approach. So much food for thought. But we've talked a lot about Bitcoin so far. What about other cryptocurrencies? Should we be branching out beyond the OG coin?
Ross definitely encourages exploring other promising cryptocurrencies. He specifically mentions Ethereum and Solana as having strong market capitalizations, good liquidity, and significant investor interest.
Okay, before we all rush out to buy up all the Ether and Solana we can find, let's pump the brakes a little. High market cap and good liquidity don't automatically equal a good investment, right? What should we be looking for when evaluating these other cryptocurrencies?
Ross stresses that understanding Bitcoin is the foundation for grasping the broader crypto landscape.
Yeah.
Market cap. It gives you a sense of the overall size and perceived value of a cryptocurrency.
So think of it like a company's stock market value. But for crypto, the higher the market cap, the bigger the player. And what about liquidity?
Liquidity is all about how easily you can buy and sell that cryptocurrency.
Hmm.
It's about having enough buyers and sellers in the market so you can trade without causing major price swings. You don't want to be stuck holding a coin that you can't easily sell if you need to access your funds.
Right. Getting stuck with a coin you can't unload would be a nightmare. So market cap and liquidity are important. But what else should we consider when venturing beyond Bitcoin?
That's a great question, and it's something we're going to delve into in part 2 of our deep dive. We'll explore what makes these other coins tick, what problems they solve, and why they might be worth adding to your watch list.
I'm already intrigued. Stay tuned, folks. We'll be right back with more crypto wisdom from Tyrone Ross after a quick break. Welcome back. So we're continuing this deep dive into crypto volatility, and I'm really curious to hear more about those other cryptocurrencies beyond Bitcoin, like Ethereum and Solana.
Oh, yeah, for sure. But, before we jump into specific coins, there's another layer we need to think about. It's the whole regulatory landscape.
Oh, yeah, the regulatory stuff. It can feel like a maze sometimes. There are rules, but figuring them out feels impossible. So how does Tyrone Ross see this playing out? Is it a good thing, bad thing, or just a big question mark?
Well, actually, Ross sees potential benefits to more regulation, and not just for the big institutions. He thinks it could be good for both institutional investors, those with deep pockets, and retail investors like us, everyday folks.
No, that's counterintuitive. I think most people assume that regulations just stifle innovation and make things more complicated. So why would more regulation be a good thing for crypto?
Well, for those big institutions, clearer guidance from regulators could really boost their confidence right now. There's a lot of uncertainty, and that makes those big players hesitant to jump in with both feet.
So if the rules are clear, more big players might feel comfortable investing, and that could lead to, more stability for the whole market.
Exactly. That influx of capital could have a ripple effect throughout the entire crypto ecosystem.
And for everyday investors like us, Rice is highlighting some potential benefits like, streamlined tax rules and clearer brokerage regulations.
Yeah, less confusion at tax time. That sounds pretty good to me.
Oh, yeah, absolutely. But let's be realistic here. Are these just potential benefits, or are we actually seeing concrete changes happening right now?
Well, Ross does inject a dose of caution here. He's saying that while the potential is there, we're still in a wait-and-see mode. The market's a bit jittery right now because there's still so much uncertainty around how regulations will ultimately shake out.
It's like everyone's holding their breath, waiting for the other shoe to drop. So patience and a healthy dose of skepticism are key right now.
Absolutely. Don't get swept up in the hype or the fear. Do your research, make informed decisions. That's the best approach.
Couldn't agree more. And speaking of research, let's circle back to those other cryptocurrencies you mentioned earlier. How can someone actually evaluate them and decide if they're worth exploring?
That's the key question. Right? Remember, we talked about market cap and liquidity as important factors, but there's got to be more to it than that.
Right, it can't be that simple. So what else should we be considering?
Well, Ross reminds us that, while Bitcoin is often seen as kind of the entry point to the crypto world, it's crucial to remember that each cryptocurrency has its own unique story.
It's like exploring different countries. You can't assume they'll all be like the first one you visited. So what sets these other cryptocurrencies apart? What makes them tick?
One key aspect is the technology underpinning each cryptocurrency. Bitcoin uses a blockchain, which is essentially a public ledger of transactions, but other cryptocurrencies might use different technologies or variations of blockchain to achieve different goals.
Okay, so it's not just about the price or the hype, it's about the underlying technology and what problems it solves.
Exactly. You need to look beyond the surface and ask, what makes this cryptocurrency unique? What purpose does it serve? Does it offer a faster way to send money across borders? Does it power a decentralized platform for lending or borrowing? Does it enable the creation of new digital assets?
So we need to understand what problems the cryptocurrency solves and whether those solutions are actually valuable, and relevant to the real world. What are some examples of those use cases, as they're often called?
Well, take Ethereum, for instance. It goes beyond just being a digital currency. It's a platform for building decentralized applications, also known as dApps.
dApps. Okay, I've heard that term before, but I'm still not entirely sure what it means.
Think of it as a global computer.
Yeah.
That allows developers to create all sorts of new things, financial